I mean, if you look at it from a purely OPEC plus side, obviously the higher prices, the better, because that means more revenues for your own state. Now we're in a market where there's other factors to take into account. And I think one of the biggest one that OPEC plus will take into account when it comes to that question is when do we see higher capex, big capex increases, especially in the US and in the shale sector in the US. So the latest set of earnings and results from US shale companies have shown that so far they're showing extremely strong resilience, but also capital discipline. There's just a few of them, such as Continental Resources and Hess, have announced capex increases. But I think that as soon as you reach maybe 80, 90, or $100, then you'd have more of that. And so I think this is the point where OPEC Plus should say, okay, so maybe we've gone a bit too far now, and maybe we need the market to cool down a little bit so that we don't see that competition coming back very strongly.
Can we talk about the Iranian oil supply? Because the wobble that we witnessed on the markets early last month was down to some early expectations that we may have to contend with some of that Iranian oil supply coming into the broader market if sanctions are lifted. A lot of ifs and whens and buts around an Iranian nuclear oil deal. But what we've got on the markets is still, I guess, a level of concern in some quarters balanced against OPEC Plus saying there are no concerns about that Iranian oil supply. How do you judge it? What would be the implications of just how quickly Iran can bring that supply back into some of the key customer markets?
I think to an extent the response from OPEC Plus is sensible from yesterday, and that's because, okay, so it's true, if there's a nuclear deal, the new nuclear deal that is signed, for sure you're going to see more Iranian barrels come back on the market. But at the same time, you're having energy demand, oil demand picking up very strongly. So we expect oil demand to boost by about 5 million barrels per day between now and the end of the year. Looking at Iranian supply, what we've seen so far since the month of January are export levels of around 720,000 barrels per day. So that's more than double what we've seen back in 2020 on average. And looking at the potential from when a new nuclear deal is going to be signed, we think that it's going to be 1.7 million barrels per day over the course of 6 to 9 months, of which you'd have about 1.4 million barrels per day of crude and about 300,000 barrels per day of condensate. So looking at that potential new supply, again, 1.7 million barrels per day over the course of 6 to 9 months, it's not going to come back overnight. We're not talking about 5 to 10 million barrels per day coming back overnight on the market. And the fact that at the same time you have that energy demand picking up, I think means that the market will probably be able to absorb this, given the fact that, again, even if you include all that new supply, you still have a big supply gap to fill that oil demand that is going to pick up between now and the end of the year.